Now, Africa's second largest economy, South Africa, is faced with what Shaun Hagedorn is calling a few disconnects. He joins me now to discuss the growth of the banking sector in South Africa and what it represents, and also the country's expansion plans to the African market, as well as comparisons with Asia. There are a few others as well that we'll touch on as we discuss. Shaun joins me now from Cape Town. Shaun, thank you for your time. I think let's start with the Africa strategy. And I think it's an interesting one because I think this has been going on for quite a long time now. I think more than a decade for most South African companies. The South African government also now has an Africa strategy as seen in the work that the DTI has been doing around the African continent in some expos, etc., etc. In your view, is this being well managed at both the national level as well as at the company level?
Hello, Godfrey. Okay, being well managed, just even before we get to that, if you don't mind, there's an expectation that it can do more than what it really can do. So let's say the primary objective at the end of the day is job creation across South Africa and in other countries in the region. The capacity for developing countries to accelerate broad economic growth, economic development and job creation through selling to each other is modest. It's fundamentally modest. And the big example to point to is Asia. Asia didn't achieve very rapid growth over the last 30, 40 years by selling to other developing nations in Asia, but rather by selling to the West, which still, even to this day, is where most of the discretionary income is. And to make that point further, with what's going on with Russia and Ukraine, I think one of the things you're seeing is that what Mr. Putin is seeing is that discretionary income is very, very powerful at the end of the day, and it still mostly sits in the West. So that's just a very current example to make that point.
So what are you saying about South Africa's strategy on Africa then? Is South Africa mistaken in trying to develop this Africa strategy where they are trying to sell as much as they can to the rest of the continent?
No, it's not a mistake, but it's not also in South Africa. I mean, there are a lot of people with big profiles from around the world. I mean, Hillary Clinton, when she was Secretary of State, came to Africa and she made the point about regional integration. But really, there's only so much that's going to be accomplished there. And sure, it's great to move in that direction, but really where the gains lie in Asia, you know, most people are neither black nor white. Most people are Asian. And the big story of the first part of the 21st century is upliftment of Asia. And that's on the back of Asia integrating with the West. So for South Africa and African countries to become more integrated is a plus, and there's a lot of work to be done there. But interesting, I'll go back to sort of the falling days of the Soviet Union. They focused on their periphery nations, which also were not very wealthy, and it just doesn't take you very far. You're not going to maintain high rates of growth by developing countries selling to developing countries. At some point, you have to integrate into the wider global economy, and that's what's really behind the rise of Asia. They've done it so successfully.
Okay, that's interesting. So two quick points then from me on that. So who should South Africa be focusing on? That's number one. Number two, what about the axis that we have seen developing between South Africa and Nigeria? Nigeria now becoming the biggest economy on the African continent, and South Africa, of course, number two. How to handle that?
Okay, I kind of answer both them from the side a little bit. Is some country in Africa is going to develop a truly potent growth model, and that's not happening at the moment. But it will, and it will be. It'll have to be different than the Asian growth model because Asia didn't have Asia to compete with. Okay, and Asia's growth has been at the tail end of industrialization, and now Asia has basically tied up globally all of the footholds to industrial growth of selling to the West, where most of the discretionary income lies.
Okay, what about South Africa? Who does it concentrate on? Who does it want to? Who should it be selling its goods and services to then?
Well, then I just want to take a step back and say that South Africa's economy is really odd. I always emphasize that. It's not. It looks when you're driving around like a normal economy, okay, but it is really an odd mix in a whole lot of geopolitical, economic ways. And so you have a fair amount of industrialization, some very clever things going on, and you've got some great business people who don't work well with the people in government. And I think we're going to see that change in the near term, because it has to. And I think there's a greater realization around that. Yeah. But you have to get through that phase and then see what that looks like. And then Africa, and I've written about and spoken about this for many years, and then it is appropriate for South Africa to play a gateway role, and it is doing that, and the companies are moving there. But the coordination by everyone that I've spoken to over a number of years says that business is operating independently of government, even though there are some joint efforts.
Yeah. So, Sean, I need to get you here in Nigeria, because it's been very interesting to see what kind of observations you come away with, because this also is a very interesting place with a very interesting relationship between business and the private sector. But that's a conversation for another day. But what about the African continent in respect to what it can do as a strategy to dealing with China, to dealing with other emerging markets that are growing? Do we need, do you think, an Africa-wide strategy, or this needs to remain a country strategy dealing with China, if you like?
Right. It sounds like I'm contradicting myself a little bit, but I don't think so. So if you look at the rise of the West over the last quarter millennium, it started in the UK in tremendous diffusion, and something similar started 100 years later in Japan, and then tremendous diffusion, and most recently in China. So you start with one country, you get a growth model, and then you just continue to improve on it, and you continue to integrate. However, we mustn't lose sight of most of the discretionary income is in the West. If you don't tap into, let me just now use another country as an example, Germany. Okay, what Germany does is they have a lot of specialized skills. And that's what really education is about there. And then you tap into all these various supply chains, and it's very distributed. Yeah. And so ultimately, if it's only Africa serving Africa, you're never going to get the lift. You're never going to get the pull. But it has to start somewhere. And there will be new and unique growth models. And it will be different, because we're shifting from the industrial age to the information age, and it wouldn't be a bad idea to speak about this. Economics are fundamentally different. The information age is much less powerful in terms of uplifting lower skilled workers, and what industrialization could do over 2 or 3 generations was incredibly impressive. It's much harder to do in the information age, and so we will have to have more creative ideas around how to do that. And that will happen. It will come from aspirations in places like Nigeria or somewhere in the continent, or in this and in South Africa.
Yeah, we're waiting for those creative ideas to come through, and certainly if anyone is listening to this program and thinking about what you are saying, I'm certainly hoping that they can share with us their view. Let's go back to this whole web between the politics and the economics. Now, we have seen a strategy by the DTI, as I said earlier, where they've been going into African countries and conducting expos where they try to promote South African businesses. Do you see a stronger connection developing between business and government, and that strategy eventually working in trying to help South Africa reindustrialize and also at the same time be able to compete effectively?
Right. Okay, so in terms of reindustrialization, and this is where the business people have, their reality is much closer to the ground. And globally, manufacturing jobs have been in decline for a long time. Where you have the most specific data, in the US, in October of 1979, at just shy of 20 million, you peaked manufacturing employment. I think today it's around 11 million, and the workforce has increased by 50%. So, you really, and then in China, it would be manufacturing employment probably peaked about 20 years ago, although the numbers are, have quite the level of transparency there.
Could the answer, Sean, lie in the development of this new class of black industrialists that the South African government has been working on, do you think? And added to that, I want to talk a little bit about transformation and its impact and ability to be able to effectively make South Africa competitive.
Right. Well, the point there would be you basically have, you could say, 2 worlds. You could say the East and the West, for the most part, have fused into one extraordinarily hyper-competitive economy, and the evidence is extraordinary in that regard. And then, so the OPEC guys are meeting this week in Vienna, and then you go back to about 40 years ago, it's the end of colonization. So you had, it was only a small number of countries, but really all of Africa and all of the Middle East and little bits of Asia, little bits of Latin America have kind of adopted an OPEC model, which is not very pro-industrialization. And it's not really about investing in the people, which is really what you have to get to. You have to invest very aggressively in people to where they have the skills. And that's where you get real economic development. If you just stick with what I would call an OPEC model or a natural resources-based model, you've got to break away from that. And by the way, I mean, people really should have a better understanding of what the background is. It took the West about 400 years to do that, to where on the back of industrialization, and that was the whole thing. It started really, I guess, with the English Civil War, but you really had to move away from the people own the land. That's all you had to do when it was a farming-based economy. You just own the land, whether it was aristocratic or a tribal-based structure that was the entire world. That's how you did it. And then industrialization provided a lot of incentives to move away from that. You have to now, in Africa, this is how far you have to go to think it through. You have to say, all right, now we have an alternative where we can coax the ruling elites to be more engaging of the people on the ground. The people have the aspirations. The future of Africa is going to be driven by the aspirations of the people. And there's a lot there, and there's a lot of opportunities to make money, but those will be by commercial-minded people. They won't really be by the people, the scholars in academia or the economists. Yeah. They will be by commercial people seeing opportunities, kind of like a dot-com thing. It more resembles a dot-com scenario than an industrial scenario.
That was Sean Hagedorn, an independent strategy advisor.